Consider the four most dangerous words in investing. Is it different? It's different this time. So I'm not going to lie to you guys. I have thought to myself, okay, is it different this time? Then the next question you have to ask yourself is, what would make it different this time? It's not just about, is it different? What would make it different? You know, back in 2022, when we had 0% interest rates, I remember saying, if you believe interest rates are going to be 0% forever, then valuations are probably appropriate. Because you got to remember, guys, there's an equity risk premium. What that means is if you're getting whatever percentage you get from the government, that's your basically risk-free rate as of right now. What premium do you need to justify investing in the stock market? 1% per year, 2% per year, 3% per year, 4% per year. These are the questions you have to ask, because whenever you invest in anything, you've got to compare it to some sort of risk, some sort of rate. So for example, we love real estate. I'm not investing in real estate for 8 or 9% returns. Why? Because it's a lot of work. So for me to do that work, I got to get a much better return than the stock market. And the stock market's going to do 9 to 10% a year. Call it 9% just to be safe. What's that worth for me to go out there and do the work? Well, the same requirement for the stock market. For you to get the volatility in the stock market, for you to see your money go up and down 20, 30% randomly, what return do you need to justify justify doing that versus 4.25 or 4.5% on 90-day treasuries? Okay, so it's different this time. Could be different if God came down and said, guys, rates are going to be 0% for the rest of the time. Okay. Well, in that case, then you should only expect 4 or 5% from the stock market over long periods of time. That makes sense, does it not? Right? Now, if God came down and said, hey, interest rates are going to be 20% for the rest of time. Well, what return do you need to justify investing in the stock market when you can get 20% risk-free rate? These are the questions you have to ask. Okay. But I think it goes beyond that too. And I want you guys to see what I'm talking about here. I'm not just sitting here saying, it's not different. By the way, what do I really believe? It's not different. I believe at some point there'll be some come to Jesus moment where markets do fall and markets do have a reversion back to the mean. When? I have no idea. No clue. And the biggest mistake I made was trying to bet on that. So when it comes to the markets in general, you have to sit there and decide for yourself, okay, what else could justify a higher multiple in the markets? Very simple, guys. I've said this before. 100 years ago, 50 years ago, manufacturing was a main driver of the economy. It's a very capital-intensive business. You have to invest a lot of money to drive up profit. And driving up that profit took a lot of time. Nowadays, you can generate higher rates of return on the money invested in the business because for a software business and a lot of tech businesses and services businesses, which our economy is becoming, you don't need to invest as much to get higher cash flow. Now, the flip side of that is, and this is the part that I think everybody misses. I think that's an absolute factual statement. I sit there and say, listen, as our economy gets bigger and bigger and bigger, it's going to be driven more by service-oriented businesses. And when you have service-oriented businesses, you have businesses that can increase their revenue and profit with much less capital, much less work. There'll be a time at some point in the future when a 10 or 20 person company is a $100 billion plus company. I don't know when that's going to be, but as time goes on, that's going to happen. I look at everything money. I look at our wonderful channel and our wonderful business. I've said to our group, apart from developers, I think this company could do $50 or $100 million in revenue on 10 or 15 people. That was not possible 50 years ago. That's a big difference. But the flip side of that is Joe Schmo in his basement can create a competitor for everything money very quickly because it requires less people. So the same point, somebody can drive up the revenue. Who could compete with Ford and GM 30, 40 years ago? Nobody could. Now, who can compete with them? Well, Elon Musk competed with them. A bunch of car companies that they failed, but the whole point is they made an impact of some sort. Same thing happens. Even though our business can do a lot more with a lot less people, that means that some random person can create a YouTube channel from nothing. And that's happened how many times? Look at YouTube. It's riddled with people who started something with nothing. That's what's really important. Now, I have this behind me because I go back to the stock market GDP ratio. I go back to the 10-year cyclically adjusted PE ratio, and I sit there and say, okay, every time you look at history and this overvaluation number, the next 10 years are just bad. Just bad. We weren't even, in the dot-com boom, we weren't even this, we were half the overvaluation we are today. And look at the next 10 years. Negative 2%, negative 3%, negative 4.4 right here. Okay, again, that doesn't include dividends. So if you include dividends, it's about 1.5% lower. Why would it be different now? At the end of the day, every investment's the present value of all future cash flow. But with that said, one of the things I've learned in this bull market is there should be an adjustment to what you should overpay for. Overpay, I put that in quotes. I feel people really abuse that statement sometimes, and I think high quality businesses with decent growth rates, you should absolutely overpay more for. Not overpay, pay more for. It feels like overpayment, as Munger and Buffett say, but it's not actually overpayment. It's just sitting there saying, okay, because remember one thing, Buffett went and overpaid, quote unquote, for Coca-Cola. He started buying at 30 times profit. But guess what? He's only made 11.5% on his money in the last 35 years on that. You might sit there and say, well, it is pretty good. But you got to remember, when he first started, he was making 30, 40% a year at the very early years. And over time, his book value has grown 20% a year. That's after taxes, the businesses, things like that. So I'm thinking about these things, thinking, is it different this time? Well, of course, I don't think it's different this time. But is it a shift? Yeah, maybe. It could very well be. Guys, I criticize Bitcoin. I criticize Bitcoin as an investment. I do not criticize crypto as a new way of managing money in the future. Now, do I believe it's going to be this unregulated world where no, I don't. People like regulation. I like knowing that if I send money to somebody, there is recourse on them if they don't perform. And in the world, look at Zelle. If you send money to somebody in Zelle and they don't perform, you're out. One of our employees, their daughter bought a dog from a breeder and it ended up being a scam, and she sent the money by Zelle and she lost the money. It was a scam. That's the world that I think that people are missing, that even me, a libertarian, I like the government being there to protect you from me and vice versa. That's what I still want. And the ideal world of Bitcoin and crypto isn't this world of, it's about deregulation. Well, I think that's great and dandy, and it's so ironic that it's a bunch of lefties that like crypto, but I look at it going, hey, a little regulation's fine. Do I want a faster way to pay money? Absolutely. Guys, I was on a trip this week, last 2 weeks, in Greece and Turkey. I lost my wallet in Turkey. Guys, it sucked. Why? Because I couldn't pay people. I couldn't buy things. And that's the world in which I'd love to be able to have. And I was limited on how much I could send through Zelle. I was limited on how much I could wire abroad. In fact, my bank account got shut down when I tried to wire money because they said, hey, you're in Greece and you're wiring money. This isn't you. And I was like, oh, son of a bitch. But at the end of the day, I like the fact a little bit that they kind of regulated me. Do I wish they could have said, hey, Paul, we just need to verify you a little bit. Let's figure something out. I'd have loved that. So this is the world in which it can be slightly different, but the fundamentals of investing, every investment, the present value of all future cash flow. The more you pay, the less return you make. Those will always be tried and true. Why? Because it's math. Just like when I drop this pen, it falls because of gravity. Is there a way in which gravity can change? Sure. Is it a reasonable assumption in which, it's a lot of other things that have to happen that would probably F up our entire world. But the point is, these things do change. These things are possible of changing. But there are certain fundamentals that I don't agree with. The way in which it's not different this time is there's a permanent shift in the desirability of returns, into what the expectations of returns are. So I've rambled there for 9 or 10 minutes, but I think these are really important before we get into the comments and the questions and things like that. I want everybody to hear the fact that when I talk on this channel, it sounds like I'm talking in absolutes. And don't get me wrong, I do. But behind closed doors, I'm sitting there thinking to myself, okay, what would make this different? But you guys remember, when we were talking about the EV companies that were garbage, I kept saying that, guys, these are garbage. If they work, it's not because of you figured out the right stock. It worked because of random guess. Look at Tesla. Tesla was 2 weeks away from bankruptcy. I think he said 3 times in the last 7 or 8 years. If you were right on Tesla, yeah, more power to you. That's awesome. But I look at it going, well, then why is Tesla stock still at half the price it was at its all-time high, and yet revenue is double, profits double? I don't get that. To me, that says that you can be right, you can feel right because the stock goes up. Hey, look at Alibaba recently. How many messages? I put this on Twitter. And by the way, don't forget to follow me on Twitter, @EMPaulG. I love that this happened. The number of messages I got on Instagram and Twitter and in the, Paul, does it feel right to be vindicated on BABA? I don't feel vindicated on BABA. And I said, I can't feel vindicated at 30%, just like I can't feel wrong at minus 30%. I will feel vindicated at that percent. Because for it to go up 300% will likely take a major shift in people's realizing the value and saying, wait a second, there's a lot of value there. And that's the kind of investor I want you to be. The up and down, I just got a message yesterday from 2 days ago. Well, actually, I still get messages about PayPal. And I'm like, guys, yes, PayPal is up 60% from its low. Okay. I think it's worth much more than $80 a share. I'll feel vindicated when that's happening. But remember, if my thoughts on the future, and I talk about this all the time, if my thoughts on the future here about returns happen, if we do see negative returns for the next 10 years, I'll feel good if I make 5%. I'll be like, oh, the market did negative, I made 5%. But on paper, that doesn't still feel very good. If the market goes down 50% and PayPal and Alibaba are down 20%, that'll feel pretty good. Like, okay. And by the way, I think that's possible. Why? Because I'm not saying it's going to happen, but because I look at that saying, oh, well, they didn't go down as much because they were probably already beaten up enough. Remember, this is what we're trying to, and it's very, very difficult. This is why the community is so, so important. Because I see so many messages in that community that like make me tingle inside when I see people say, great red day, this is awesome. Or, hey, just because this thing is up. And I love it when people on Twitter, like, you know, will say things to say, like, remember what Paul says, just because it's up this much, down this much, doesn't mean you're right or wrong. In the long run, what matters is, did you buy a company at a really good multiple with you? Look at Southwest Airlines. I love this. Southwest and Disney are the ones that I'm really excited to see play out because these are ones that have margins have dropped 80, 90%. And my thesis is that's probably an extreme exaggeration of margins. Once it comes back, it's probably gonna be pretty good. So now that we're here, Paul will feel vindicated when Cathie Wood goes bankrupt. When Cathie Wood will never go bankrupt, she'll retire though. Stimulus pumped in the market. Yeah, DJM, I understand, but we've had stimulus for all. I mean, look at our debt levels. We were at $3 trillion in 1985 or something, and now we're at $35 trillion. We've constantly had money being pumped into the market. Yeah, was it different forms of it? QE versus QE1, 2, 3 versus COVID. Yeah, of course. But we've had stimulus put in the market. Oh, thank you very much, DJM. I appreciate that very much. It's a, let's see what else people are saying. Can you say come to Jesus on YouTube? Puerto Rico. Yeah, so Leopold, perfect comment from Leopold. History doesn't repeat itself, but it rhymes. It feels like it's different, but human behavior is still the same. Fuck yeah, Leopold. That's exactly it. At the end of the day, we're still greedy. We still have herd mentality. That's it. I don't care what anybody says, that ain't changing. We were built on that because thousands of years ago, you had to have herd mentality to survive. So the people who had that herd mentality survived. The lone thinkers like me would have died in 14 seconds back in, 10,000 BC or whatever the time frame it was, 5,000 BC. Because it'd been like, hey, Paul's gonna go off on his own into the woods and see what's going on out there, dead, eaten by a bison. Okay, sounds good. But the people who walked together in groups of 10, they survived. And as much as we like to all say we're independent thinkers, and I want everybody to watch that show. What was that show? The Push. The Push is great because the Push shows that herd mentality in there. And I like to think I'd be different. Like I wouldn't push somebody off a building to kill them. It's a really great, but Darren Brown's Push, The Push on Netflix. I encourage everybody to watch it.
They have to have, I think, the premium account for Netflix to see it. Like,
do you?
Yeah, because that's why Dalton and Nick couldn't find it. Like if you have.
You poor people. Why aren't you buying the premium account? God.
And that's what they said.
He bets $800 a game on football. Spend $8 a month on premium.
Just sell one Baba share, Nick. Just
unbelievable.
Anyways.
But yeah, I think the scariest thing, Paul, is it started with just standing up in a lobby.
That's all it was.
Of a doctor's office or whatever it was.
Started up by sitting. And by the way, not going to lie to you, I would have stood up. I would have probably asked, hey, why are we standing up?
Right.
But I would have stood up. And I love people, friends of mine say, I would never stood up. Like, shut the fuck up. Yes, you would have. You absolutely would have stood up. Because it's a low risk thing. We like herd mentality. We like, guess what, guys? I love it when I see people on Twitter say Bob on blah, blah, blah. But then part of me goes, yeah, but do I really want that? I have the ability to say, yeah, but do I really want that? I have the ability to sit there and I'm not going to be right on everything. There's no way. But if my thought process is correct, and my thought process is, if everybody loves something, I've got to question it. Everybody hates something, I've got to question it. It's just the way I was built. I remember my dad when I was younger used to say, you're so argumentative. You have to take the opposite side of everything. My friends call me Mr. Contrarian. Paul's got to be contrarian. He hates this. I'm like, well, that's the way I am. That's the way I am. But it's helped me. I don't own Google, by the way, Hans. More rate cuts bullish. You know, I don't know. Yeah, Coke Zero. Oh, Modesto. I had cousins who used to live in Modesto. That's the Scott Peterson town. 350Z. Yeah, Palantir. Look at Palantir. That was a company that 3.5 years ago was hit $45 a share. And everybody was like, God, Paul, you're so stupid. You know, there's that YouTube channel, Tom Nash. He criticized me like crazy. And I was like, listen, I'm interested in under at 5. And he recently, by the way, he blocked me on Twitter, but he recently put on Twitter, and to think that guy thought it was worth $5 a share. I'm like, well, I did think it was worth $5 a share, and it hit 583. I'm not saying that was me being a genius. It was just me sitting there saying, I don't care if it went to 500. I have the ability to say, it doesn't make sense to me. It doesn't make sense to me. That's it. And I can respect that for anybody to say, you know what, Paul? People disagree with me on Disney. Paul, it's woke. All right. Okay. Every single investment I have, I can see the negative comment about it. Of course I can. That's what makes them cheap. You have to be able to see the negative story on the company. I have to be able to look at the market and say, man, we keep seeing all-time highs again. What? Is it perplexing? Fuck yeah, it is, guys. Fuck yeah, it is. The last 4.5 years since COVID crash, I've been like, what is going on here? Some great value investor friends of mine are like, yeah, this is tough. Even Buffett and Munger were saying this is the hardest market we've been involved with. They've been around for 1 billion years. And that's the hardest market. Hey, Yazid, this is my original name. Ni hao. We changed it when we came to the States. I love that. Iraqis don't name, it's either Hussein or Ali. Where's Paul from? I'm Christian, I'm Catholic, but my original name was Nihal. And then we came to the US and we changed it when I was like 3 or 4. And I got to pick it. Isn't that interesting? Yeah, value seeker. I agree with that one. And that's the thing that I want everybody to remember. Like, somebody yesterday wrote on my Twitter, like, Palantir's at 41. And I was like, yeah, I love it. I'm glad it's at 41. I still have questions about their accounting. Their free cash flow, ironically, is great. But their EPS, it just seems like they're just beating every time. By the way, I have a 5 o'clock shadow, Hans. Mo has a beard-ish. That's funny. So, guys, it's different this time. Tim asked me yesterday or 2 days ago, Paul, what do you want to have? What do you want to talk about in this live stream? And I said, is it different this time? And he loved it immediately because I was just like, listen, these are conversations we have to have now and at some point when valuations are really cheap. Because, guys, valuations can't stay expensive forever.
Right. Because I know, like, when Dalton comes in town, we'll have these discussions and we'll be like, okay, why isn't the market doing this? Why isn't the economy doing this based off of
And I used to get
what we're
upset about
seeing.
this. I used to get upset when the market would do this. Now I'm just like, okay, it's part of the cycle. There's no reason to fight it. There's no reason to argue. Listen, I used to be this guy who was like, F the market, this is stupid. Now I'm just like, okay, it is what it is. It'll play out. I can't get upset on it going up, just like I can't get upset on it going down. I just got to take it as what it is. And do I have regrets from not investing more? Absolutely. After the COVID crash, I was pretty much even with and I was like, and I didn't take advantage of that because I thought, okay, this is the start of something bigger. Instead of me going back and going, hey, Paul, you should look at some of these companies. They're pretty good values out there. I did not. 2050, it's all 2020 in hindsight, but now I have 18 companies and I love every single one of them at the values I bought them at. Love them. And I'm hoping that I'll get to buy them cheaper at some point in the future. Jin Wang, I don't know what price I want Amazon at. Amazon's a tough one for me because I don't know if I understand the financials enough to be able to give it, to me, I want to let the dust settle on Amazon a little bit. I know you might sit there and laugh going, Paul, it's a $1 trillion plus company. I know, that's what's amazing. But that's what I want you to see in the confidence of saying, Paul just says, hey, I don't get Amazon, obviously. I don't get 15% gross margin. I want to see something better. Oh, absolutely, Hans. You're 100% right. If you DCA, if you dollar cost average into ETFs, you'll benefit from stupidity as well. Absolutely. Great statement by Hans. Every once in a while, Hans has a good one. The market's going to go like this over time. Value-wise, the pricing is going to go like this. This is stupidity. This is stupidity. Which one do you want to profit from? Guess what? You never know. It's hard to tell when you're at certain ones, so just profit from both. Go all the way up and down. Guys, dollar cost averaging is a wonderful thing. And it's funny. I've become more and more, I start doing my numbers on what I need to live my life. And I'm like, why do I even pick individual stocks? One thing, I love doing it. But don't think for a second there won't be a time. I'll tell you this. One thing I know for sure, when I think we're here, I'm going to be dollar cost averaging into that. Because these are the companies that can grow their revenue and profit much. And history's shown that if you buy QQQ and market's undervalued, you can really get outsized returns. That is definitely. And I don't want to guess on which tech company is going to be the winner and the loser and all these things. No, I don't want to guess that. Just let them take care of it. Now, will I buy individual ones? They just get stupid. Yeah, of course. Somebody said they were selling their stocks to buy Adobe. I would love to buy Adobe at stupid numbers. It'll happen. By the way, Andre, you say this. Microsoft seems like a wonderful business, will never be cheap as long, incorrect. Because 25 years ago, everybody said Microsoft is a wonderful business, it'll never be cheap. And in 2009, 10, 11, 12, 13, it was selling for 9, 10 times earnings, and people said the company was dead. Everything will shift. Dell Computer was the can't miss company in the late 90s. At one point, they went private at 9 times earnings. Because they're like, yeah, we're not getting the value here. Let's just go private, focus on building our cash flow up, and then go public again with a fresh start. Nat Lee, I don't think it's even a possibility. I think it's likely. I think the next 5 or 10 years are going to be harder than the last 5 or 10 years. Oh, Khalid, I own Nike, and it's now big gainer today. It hit 80 for like 3 seconds and then went back up. But it's a big gainer. I think it's like one of the top gainers in the Dow and S&P today.
Do you think technology has really made it different this time?
It's helped in shifting. So yes, I think technology has helped in shift the standard for investing. But again, I talk about the thing about technology is you can have kids in college making a business that can compete with some big players.
Well, I just think about, all right, the phone and the app, and now people can make their trades like pretty instantly. Before you had to call them in, right?
Yeah.
It wasn't so easy to sell a stock.
Yeah. When I was in high school, I was calling in for my stock quotes. Now it's just literally you can have them on your screen.
And now most of these like hedge funds and stuff are buying with bots. Is that right?
It depends what kind of hedge fund it is. But yeah, listen, we want to get to the EM community at some point where you can attach your brokerage to it and it just buys it for you once it hits your target price. That'll be a future of EM. And if you told me 25, 30 years ago, I don't own a company that does that, I've been like, no way. And it'll happen, right? So iHungry, this is the absolutely brilliant question that everybody's got to ask. If we believe the S&P is going to do bad the next few years, it would be a good time to DCA into then. It's been overvalued since COVID, since the beginning of COVID. So at some point, and now I think fair value is 30% above COVID's low price. You just don't know when it's going to happen. Plus, the other thing is, my personal opinion, and do what's right for you. Do what feels right for you. My personal opinion is, I want to get in the habit of buying. That's why when a stock falls, for me to sell a company, I've got to really, really, truly believe I was very wrong. Carnival Cruise Line, Walgreens. Ironically, I made money on both. And that's proof, guys, that you can be wrong, but still make money. You can be right and lose money, right? I made money on Walgreens and Carnival Cruise Line overall. And I was absolutely wrong on both of them. Absolutely wrong. Like literally could not be more wrong. That's not true. I could be more wrong than that. But the point is I was absolutely wrong. So I don't know what, so I like for me, like Intel, I could be very wrong on Intel. I'm going to stick with it though, because I don't have as much invested in there that if I'm wrong, big deal. If I'm right, it's going to make me a good buck. Zach Dar. Oh yeah, is the legitimacy to the force split up on Google? I saw it again today. They're talking about splitting up Google. Maybe they will. I don't know. Yazid, I don't think I think that's great. I will own Nike if it goes down to 30. I think that's a really low price now, Yazid. That's my personal opinion. Otherwise, I think there's much better stocks out there and cheaper. And you know what the great part is, Yazid? This is why I like teaching on here. Because my financial situation is very different than everybody else. My return requirements should be lower than everybody else because I've got enough. I don't need to hit home runs. I don't need to be, but then again, someone could make the argument, Paul, if you have enough, you should sit on the sidelines with cash and only buy when things are really, really cheap. Yeah, that makes sense too. But for me, I want to buy big companies that are no-brainers. They're going to be around for a long time. And if they become cheap-ish, I buy them. If they become really effing cheap, I buy even more. Look at Meta. The only thing that sucks about Meta is I sold it at 195 after it skyrocketed from 88 because I did exactly the right thing. I started buying, and I even bought it on the very lowest day, November 4th, 2022. I was so disciplined to do that, and it made absolute sense for me to do that, and yet I sold it. But Meta's a great example. The company's up 6 times from its low. It's incredible. All-time high, devoid of reality and fundamentals, just memeing. Yeah, Max. I mean, here's the deal. I don't think the memeing stocks are as bad as it was. I think the EV, remember, everything deteriorates from the outside in, right? So we've had the EVs go to zero. We've had the tattooed chefs go to zero. We've had a lot of junk stocks go to zero. But now it's how do the big companies that are selling for nosebleed valuations go down? I was on that cruise for my honeymoon, and how many people didn't even know what I did for life. I never mentioned everything money. I never did mention investing. I just said I was in real estate. And every single day, someone would be like, hey, what's NVIDIA at today? And I would just chuckle. I'd be like, oh, it's at this, you know? Hans, I don't even think it's being up 4 times. I think it's if the stock is 3 or 4 times overvalued. That's the only time I'd consider exiting, maybe twice overvalued. Look, I have Sprouts Farmers Market. I don't think Sprouts is worth 100 and whatever it's at a share right now, but I'm not selling. I'm not going to make that same mistake. I'm not, because I think it's a great company with a great ability to build on its profit. Yeah, me too, Hans. Ugh. Bonds, guys, bonds. Oh, Pemex. Wow. Wow. Hey, Dalton, let's take a look at Pemex. That's a pretty good yield. Oh, CB, I think that's great. Beaten down good companies. Nothing is better than buying a company that's price is down and fundamentals are getting better. Nothing in this world could be better than that. That's the mentality. That's the investing I want to do. I used to want to be the early Buffett investor, finding cigar butts. Not anymore. It's too stressful. For me, I'm like, I don't need to make 20% a year. I don't need to make 15% a year. If I can beat the market by 1 or 2% a year and do covered calls to add, 2 or 3% more, What else do I need? I've got real estate. I've got businesses. I don't need any more. Will rate cuts affect big banks? That's a good question. The home handyman. What do you think I think of covered calls in retirement? I think it's absolutely brilliant. I think you got to figure out a way to make it work. Your 2B policy should change for members. What's 2B?
Oh, 2 billion stocks.
Oh, yeah. We're going to get a group in there for that. We're talking about that. Yep. I appreciate you saying that, Yazid. By the way, the other thing is I've got a great analyst in Dalton. This is the guy who can look into $50 million companies he is freaking brilliant. And he's the guy I would go to for these companies. So that's why we're entertaining doing the south of 2 billion. You know, Yash, I haven't looked at the Indian market. Oh, Lost Island, T Rose within it, right? I don't even know. Does veterans get a discount on mortgage rates? Do they really, Zach? Like what kind of discount? How much of a discount is that? How much of a discount is that? Paramount finally said to be bought by Skydance. That's Larry Ellison's son, I think. Larry Ellison's son. What's up, Greece? I was just there. I was just in Athens and then Idra, Mykonos. No PMI for veterans. Oh, that's pretty cool. No shit, Dalton. Can you imagine borrowing at 1.75% to own a home? I would buy a $20 million mansion in California. I didn't even think about it. I'd be like, all right, sounds good. My mortgage rate's gonna be $30,000. My mortgage payment's gonna be $30,000 a month. Yeah, tomorrow's CPI. I'm only here for Dalton, to be honest. Oh, that hurts, Yazid. That so hurts. Yeah, he's great. Yeah, Greece is really nice. Greece is very, very nice. You know, I was on this cruise for my honeymoon, and I didn't want to get off the boat. I just wanted to stay on the boat the whole time. I just loved it. I don't like baklava, Hans. I do not like baklava. My family's been eating it for decades. I don't like it at all. Vatsal, John Hussman, I think he's a very smart man, almost probably too smart. I love the fact that there's somebody out there with way worse returns than me, who I consider smart in the last 5 years. I read his market comments. I love them, but he's had it tough. He's had it very tough. Baklava, more like barflava. That was a good one, wasn't it? So guys, write a yes in here if you're a member of our community and our software. Write in here, yes. Cool. I just want to see how many people watching have our software, have access to our software. Yeah, Sean, I just heard that from my cousin. My cousin, Yusuf, who lives in Calgary, said that rates are only locked for 5 years. Oh, that's great. Look how many people. Jerry, no. Tideman, I'm not into fragrances. Wow, Nick Trolla, since 17 a month. Good for you. You better never cancel that. Hell yes. 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 I love it. I love it. A lot of great people. Rocket Mike, join the community, man. Join it. You know, there's been a lot of discussion internally about what our goals are for the community, for the software. I've always talked about having it be exclusive to only a set number of subscribers. I like having a set number of subscribers. I love the engagement in the community. We have Dalton. He's been added to the team. He's been great in the community. And I want to get 3 or 4 more Daltons. I know they're out there. There's got to be some out there. And Dalton's been a wonderful addition. I'm glad you guys are very much valuing him. Nick Trolla. Well, Nick, email help@everythingmoney. See what they can do for you. Sean, you're one of the original gangsters. That's awesome. That is really awesome. You know, these questions we ask about, is it different this time? Any question you have about an investment. It's not about, I don't like it when value investors say, I used to say this, by the way. I used to say, my job is to beat up an investment and find any reason not to buy. And then over time, I was like, there's always a reason not to buy. There's always a story of not to buy. The question is that story the right story? And I learned this from a great statement I heard. The statement was, there are detail-oriented people who are successful, and there are non-detail-oriented people who are successful. What's the difference? The difference is the detail-oriented people. There are detail-oriented people who are successful, and there are detail-oriented people who are not successful. What's the difference? The difference is the ones who are successful know which details to be detailed about. Nothing aggravates me more in business than when I have a detail-oriented employee or associate who focuses on absolutely the wrong things. I'm like, why do you care about that? Well, I'm detail-oriented. I'm like, that is not the detail you need to be worried about. We need to we need to progress along. The same thing with investing. It's important to be detail-oriented in investing. It's important to understand things. But the key is, what are the things that matter the most? When I got in that, YouTube beef with Jeremy from my financial education about Tattooed Chef, my biggest thing with him was he said, you got to fall in love with the story first, and then you worry about the numbers. And I said the exact opposite. And guess what? I'm sure there are people who do it the other way and do well. But for me, if the numbers don't even make sense, I don't care what the story is. Yes, you might be like, well, Paul, what if it's going to grow 40% a year? I'll lose out on that one. I'm fine with that. For me, that works for me. Yeah, exactly. Do airline miles count? Oh, yeah, Bruce, it's great. Poll for average income. Oh, that'd be interesting. Sean, I haven't looked at Adobe in a while. I don't know what my price is on Adobe. If it's under, Paul, after reading Mastering the Market Cycles, I feel like you end up trying to time the market a little bit, knowing the pendulum. I think I can understand your comment on that. I think when I was shorting, that was definitely the case, but I'm not shorting anymore. I'm just trying to buy companies that make sense at prices that make sense. Would you say that, hey, Paul, you should be buying more? Yeah, maybe. But the fact that I'm actively looking for investments to buy in this market that has massive overvaluation, I think that kind of goes against that argument of trying to time the market. In the past, have I been trying? Absolutely. Absolutely. I don't disagree with you at all on that one. Now, maybe I'll wake up 5 years from now and say the same thing. But I look at this now going, yeah, but I'm still looking for active investments to buy. It's not like I've stopped looking for investments. It's not like I've stopped buying. I still have cash secured puts out there trying to buy companies. At some point, overvaluation is overvaluation to me. And I'm willing to pay a premium for great companies. That tells me I'm not trying to time it, especially considering where market valuations are, in my opinion. If I'm buying anything at this, I think that kind of goes against the whole market timing idea. But I definitely understand why you're saying that. I definitely understand that. I appreciate the comment immensely.
I think probably the other reason why people could think that is because of you selling puts versus just outright buying a share like other normal people do.
But I sell puts because the stock isn't at the price I want yet. Right?
But then occasionally you may not get the shares awarded to you.
Yeah, but
that's what I think people think.
But if a stock I think is worth 80 and it's at 90, but I sell a put at 80, I'm not buying it at 90 anyhow. So from my head, I might as well just get the income. So when people do question that, that would be my response.
Right, but they don't see the income coming into your brokerage account from either being paid to wait or whatever.
But it's one thing if I think a stock's worth 80, it's selling for 70, and I don't buy it and I sell a $65 put. That to me is like, I can understand the argument. But what I do when a stock's at 80, and I think it's worth, when it stock's at 70, I think it's worth 80, I'll buy some at 70 and sell puts at 68 or 65 or something like that.
Yeah, and I just think that's one of the examples of why people could think that you try. I mean, you don't, but that you use puts.
Well, and by the way, I do think I tried to time back in, After COVID, when stocks started to march up again and I started shorting some more, okay, I was trying to time it. There was no process to my shorting besides it's overvalued. Big lesson learned. Okay, move on. Guess what? Every year my net worth keeps going up. Even in my bad years, and that's the thing I think is funny. I look at it going, that's probably part of the reason why I shorted, because I was like, yeah, I have real estate, I have businesses, my net worth's still going to go up anyhow. Now I look at it going, the mistake I made was I risked money I had to get money I didn't need. That old Warren Buffett and Charlie Munger adage. I do sell covered calls, but I don't think I would have wound up selling Meta anyhow. Because I wasn't, I was still, my covered calls, I write against themselves. Only a couple of times have I ever lost shares to covered calls. Either they're taken early or the stock, like Southwest Airlines. I bought it at 25 right after COVID. Went to 45. I wrote a covered call at 48. It went to 50. I lost the shares. But I was fine with that. I was like, listen, I think the company's a $50 company anyhow. I'm fine losing it. That was fine by me. Oh yeah, Schwab. Yeah, Hans, you're right. I think there's a process that I did not follow. And guess what? I'm really glad it happened to me at 40, 42, 40, 41, 42 versus 80, 81, 82. When I'm worth, 30 times more. Actually, probably more than that. By the way, guys, my wife and I have had a lot of conversations lately about how we want to live our life financially. And my desire to be a billionaire is now even gone almost. Not gone, but it's not important to me. As long as I'm doing well in investing. I don't care if I piss the money away though. That's the difference.
But it's just math.
Yeah,
Right.
But the goal is if we're able to spend more to enjoy life more, and at the cost of, instead of being worth $2 billion, I'm worth $800 million, I'd rather do that. Because we enjoy life more. But we're not going to spend just to spend.
So is your discussion about like finding the balance of like being content now,
Yes.
but yet still growing and having
Yes.
more?
Yes. Yes. And the other thing is our age difference. I don't want to wait till I'm 60, 65 before I start spending, and Lisa's 80. You know what I mean? I don't want to do that.
I think it started to change a little for Laura and I, even though we're young.
Really?
You know why?
Why?
So I heard the comment, and it's probably true to some extent. They said you spend 70% of the time that you will with your child by the age of 12.
Yeah.
95% of the time you'll spend with them by 18.
Isn't that incredible?
And I said, let's just go make memories. We'll still invest first, but instead of worrying about doing X, Y, and Z, let's do both.
Yeah. It's incredible, isn't it? Listen, I like it. And at the end of the day, our businesses are all literally a fraction of what they're all going to be. So if I just piss away all my cash, but I have my businesses in real estate growing, I'll still have gobs of money. So what the hell do I care? That's exactly it, Steven. Did you see what I said to Hans? Hans goes, Paul, who was at Diddy's parties? I was. Don't tell anyone. We know that, but who else, though? Weren't you there, Hans? Matt Jones was. Where the hell is Matt Jones? Oh, David Stein's reading. I'm reading Dying with Zero. I just told my my therapist the other day about Die with Zero because she was telling me about how her goal is to die with zero. And I said, oh, have you read the book? She's like, no. I'm like, there's a book called Die with Zero. Now, I don't think it took me to that extreme, but it definitely made me think, yeah, what the hell is this for then? What's the purpose of all this? Like literally, if I die with, like literally there's numbers. There was a time when I saw a very clear path to $100 billion net worth at the age of 100. And that was important to me. So why? I die with $100 billion, then what? And you might sit there and say, come on, Paul. It's like, listen, 12% returns for all my life. Yeah, I would have gotten there. And you look at that go, because that's how much compounding works. With my real estate deals and yeah, I would have gotten there. Now I'm looking at going, no, I'm just going to start spending. I spend double what my brother spends. You know that? My brother has 3 kids and I spend
No
double.
way.
Yeah, I spend double.
Oh.
I should say this. My budget is double what he spends, but I also factor in a lot more big things in my budget than my brother does. Like my brother will buy a car. He hasn't factored into his budget. I factor the car into my budget. Right? So so that's one thing that's different. Hans, send me your wire instructions. Eric, we're going to be talking about Celsius very soon. When are we doing our Celsius video? Monday?
We're going to record it tomorrow. It'll be out Monday.
Perfect. Hans, I do not have to give up McDonald's to live to 100. And I don't, I'm going to die on this hill. I do not consider McDonald's breakfast that I eat McDonald's. I just consider it breakfast food. I eat a sausage burrito. It's a tortilla with egg in there. How is that McDonald's? Now, if I ate Big Macs and stuff like that every single day, I get that. But it's funny because even on our cruise, somebody asked me, like, how often do you have like normal McDonald's? And I looked at Lisa, I'm like, actually, we don't have it that much. She's like, maybe once a month. You know what helped me though? Decrease that? Going to McDonald's every morning for breakfast. Because then if I go another time in the evening or lunch, it's like I just feel like a fat fuck. I feel disgusting. What'd you say, Nick? Feel dirty. Yeah, I feel dirty. So I don't do it. I will tell you, on this cruise, by the way, she's not my wife, Paul. The age difference is about 16 years. So Hans, I've never had Taco Bell breakfast. Dalton, you're bat meat. Shut the F up and stay in your lane. So what I was going to say, I was on this cruise and by the way, I eat salads every day. My wife and I eat very well when we go out. We don't overeat. We split meals a lot. It's funny. We go to a restaurant and we split meals. You think that we're on like a budget or something because we just like sharing meals. Like we'll get a salad, we'll split a salad, or we'll get each a salad and then we'll split like a dinner or something like that.
That's awesome.
Oh yeah, we love it, but not because we're trying to save money, just because we're like we don't want to overeat.
I think you have variety too.
Oh yeah, it's variety too. So anyways, we're on this cruise and I think the average age was 63 to 65. And there were some 70-year-olds where I looked at them going, holy fuck, you do not look 70. Like they were like 50. They looked like they were 50. They were just in such great shape. And I was like, that was a real motivator for me. I came back yesterday. I worked out like intensely, did it quick, get my heart rate going. I've been eating better since I came back. Even on the trip, I was eating better because I was like, you know what? Does somebody see Barry? I just saw an article today about Barry Switzer on, the football coach from Oklahoma. He's 87. He looks fucking great. He's 87. I'm like, that's what I want to have. Philip, you're right. I used to have 100,000 points on my McDonald's card because I never used any of it, but now I'm starting to use them. So, Steven, I'm going to tell you exactly what I'm doing with my inheritance, with the money I'm going to give to the kid. Nothing is going to children. First off, because I don't have children. But even my stepkids, they're not getting anything. But you know what? I'm giving money to my grandkids, but I'm only giving them enough to live a decent retirement. When I say decent retirement, to be able to retire and live a normal life. Not anything extravagant, nothing great, and it only goes to them if they save. So I'm going to talk about today's dollars. If my grandkids each save $2 million in today's dollars, I'm going to match that $2 million. That's my goal. So they can have a $4 million nest egg and retire at 60 to enjoy the next 40 years of their life. But even on $4 million in today's money, at the 5% rule, 4% rule, you're not living a baller life. Are you living a nice life? Absolutely. But I don't want my grandkids flying private because of me. I don't want my grandkids, owning Ferraris because of me. I want them to be able to say, hey, we worked and saved, and grandpa took care of us, matched it, and now we can retire and live decent. Paul's incense. First off, Hans, you've never seen me stretch. If you saw me stretch, you'd laugh. Hey, Leopold, I think that's a great comment. Life is all about balance. But I also like salads a lot. Like, I actually genuinely love salads. And we fell in love with the Greek salad. My parents used to make the salad too. We're not Greek, we're Middle Eastern. Everybody calls it a Greek salad. It's probably from the Middle East because we were there first. But either way, tomato, cucumber, onion, and just like an olive oil dressing with a little bit of vinegar on it. It's fire. I could eat that every single day. See, I don't like feta. The only cheese I like is American, cheddar, and pepper jack. That's basically it. I'll do mozzarella because it's like on everything. What was that? Provolone? No, I'm not a provolone guy. I'll eat it, but feta and blue cheese and goat cheese, that'll literally like ruin a meal for me. I'll take the meal and just throw it at the waiter or waitress and say, get the fuck out of my face.
Paul, did you see in the comments, a couple people had said they joined the community?
Oh, that's great.
It might have been up.
That's awesome. Who was it? I know Rocket Mike did.
Yeah, Rocket Mike. And there was one other one that said that they had joined the community.
That's awesome. Nat, I have one grandkid right now. He's 2 years old. One important question. As a rational manager, would you risk half your net worth on one person? You'd never put half your money in one stock. I don't know if I understand, Paul, what you're saying about that. Oh, are you talking about steal? Are you talking about the? Oh, I thought you were talking about. I got it. You mean in terms of inheritance? Inheritance. Listen, feta cheese sucks in my opinion. I hate it. I hate all those cheeses that smell like
tart. That are kind of.
I don't think is it tart or just. I don't know. I just don't like the.
Bitter? Maybe a little bit. I don't know.
Whatever it is, I just. Yeah, the queso is good, but what kind of cheese is that? That's just like cheddar cheese. Queso is cheese. That's what queso means. It means
like
cheese.
Cheddar, maybe some pepper jack in there. I don't know.
I love pepper jack. So guys, we've already seen a couple people join the community, and I want everybody to realize my goals for the community are to limit membership, and that's what's there right now. We have limited daily spots for the community and software, and as I've said 1,000 times, the reason for that is because we have all the tools for the software: retirement calculator, stock analyzer, real estate calculator, everything for retirement, stocks, and real estate. But we're gonna change that soon. It's all about exclusivity, and it's also about making sure we let people focus on the things that matter to them more. Now, if you're one of those people who goes, listen, I don't know what's gonna happen in the future, I want all of it, you still have that time. And that's what's really important. We keep talking about that. You still have time until we split everything off. You still have time to be able to get everything because we have 4 YouTube channels now. And these changes are absolutely happening. Are they slower to happen than we originally wanted? Yes, but they are happening so that we're going to limit the tools you get as time goes on. But if you still want everything, it is still possible right now. You can still get all the tools and everything we've done in the past. Because if you remember, who here was around like original like sub 1,000 subscribers? I had that little Excel sheet where I was on there and people would say, Paul, how do I get that Excel sheet? And then we finally decided, you know what, people want it, let's give it to them. It was all purely by accident. And we did that because, and I use that software. I use everything in the software every single day. In fact, the software, when I open up my browser in the morning, it opens up Outlook and Everything Money immediately. They're my default openings because I need to remind myself all the time. I do retirement calculator a ton. So I need to remind myself, and that's what's helped affect the way in which I view money. So as the channel's growing, we're trying to make it more about you guys, and this software is becoming more about you. So guys, if you want to make better decisions, probably sleep better at night, probably get better returns, it's $7 for 7 days to try it out. You'll be, whatever price you get will be the pricing tier that you're stuck in forever. So if you want to do this, guys, go to the link. We're going to put the link in the community. It's already up there. Go sign up. $7 for 7 days to start. Test it out. Try it out. Interact with people. If you don't interact with people and just want to use the software, do that. It's well worth it there too. The community is an important element though, especially when stocks go down. Now guys, if you're brand new, when you click on it, you're going to be offered an annual offer. If you're already a member of our community, you can lock in the price too and switch from monthly to annual pricing. That's going to be the best price you're going to get. Okay, so I'm still waiting on the second Tesla giveaway. Well, we didn't hit our goal there with the bright light. What was the bright light? I've been a member since Paul was doing valuation on the board with a bright light. What was the bright light? I don't recall this.
Okay, old studio when it was pinned up against the wall. Just the lighting was different.
Oh, got it. No mirror.
The OG original board days.
Yeah. No marriage and divorce. If you get married, you may lose half your money. That's true, but you can have prenups for that. Like all subscription platforms, gain users and then crank up the price and reduce the features. Yeah, I don't think so. But by the way, that's the thing that you don't realize. Like, I'm going to respond to that immediately, Shandeep. We're just offering a great value today. You can get the great price today and sign up for it. All I'm saying is that in the future, if you want it, it's going to be split up. It'll be cheaper to get retirement calculator, but you only get retirement calculator. It'll be cheaper to get real estate calculator, but you only get real estate calculator. If you want it all, now is the best time. We're not cranking up the price. We're just sitting there saying, listen, this is what's going to happen because we have found that people focus on certain attributes of the software. That's it. So, Hamed, what amount of money should you consider a financial planner? I don't think it's about a money. It's about a mentality. Do you think you could, look at it this way. The community's your financial planner. Literally, the community is your financial planner. People in there talk about, hey, I have this. I'm going to do this mortgage. I'm going to do, the whole point is now instead of one financial planner for 1% a year, you could have, thousands of financial planners for $1 a day. I think listen, I was on this cruise and I met lots of couples. And I probably found out the careers of about 8 of them. 4 of them were financial planners. And I just chuckled at that. And I was just like, what a overdone career. And costs do go up, and they will go up. DJM, DJM, is this you? Are you saying you feel guilty flying first class and staying in captain suites on cruises and Movado watches? Is that you? Or are you asking me if that's me? Seth has not been on the channel for over 2 years. If you're just realizing that now, then you need to watch more of our videos because we've done hundreds and hundreds and hundreds of videos since then. Yeah, it's been 2 years. So I want to see, that was funny. DJM, why do you feel guilty? Are you hitting, here's my thing. By the way, I feel guilty too. I used to feel really guilty. Now I feel less guilty. If you're hitting all your financial goals, if you're in retirement calculator and all your goals are being hit, then enjoy life. Enjoy life. What matters most is, like Tim said, we save first and we enjoy. Make sure you're hitting your goals. Don't feel guilty because you enjoy money. What's the guilt of it? Like, what are you guilty about there? So Khalid, the real estate calculator is not on the app yet. It's on the desktop version, right? Yeah, it's on the desktop version. You should have it. If you don't have it on the desktop version, email help at everything money. It's there. Why get married? Okay, sounds good. I like this engagement here. Then what's the point of marriage? I know it's a battle here, but I look at this going, listen, everybody has a different view. I have money and I chose to get married. We figured it out. We had a prenup. I'm taking care of her nicely. I said to her, what's the most important thing to you? She's like, listen, I'm 60. I don't want us to last 10 years and I have to go to work. I said, you'll never have to work again. That was it. And we made sure of that. That's our deal. And it's not going to affect my life one bit financially, and she'll never have to work again. So it gives her a peace of mind that if we don't work out, she'll be taken care of the rest of her life. I'm really interested in this DJM comment. What do I spend on? My largest line item budget besides my home. Well, first off, my home is number one, and my home is where we live is very important to us. My wife loves design. I like being at home. We wanted to have a secluded house where we could entertain our family. We have a great pool. We have a great backyard. We have a great patio. We have a great home. The kids love coming to our house and spending, like we have her adult kids come and spend the night with their families on a regular basis, at least once a month. And they only live 30 minutes away. That's important to us. Our second most important item is travel. Our second largest line item is travel. We love traveling. Every year, it's right now, it's October, and we're already planning all the trips through next year. But others in family can't spend the same. I don't know. I get that. Oh, well, what's your situation different than theirs? What sacrifices did you make? What things did you do different than them? You can't expect the same outcome for different actions. That's not on you, man. That's on them. I know it's easy for me to say that because I don't think I've ever had that situation. Oh, trust me, Jerry, my wife wants to go RVing so bad. My wife wants to do an RV trip so bad. So bad. No, I love his comments. I love his comments a lot. Listen, these are the things that I actually enjoy talking about. When we first started this channel, it was all about how do you make more money? And then I started to realize that the emotional part of making money was the most important part. Guys, we have about 30 seconds. This thing is absolutely flown. I didn't realize it was that far along. So guys, again, no, I have a call at 11. So everything, guys, sign up for the community, $7 trial for 7 days, no brainer, gets all the software. You're gonna be locked in your pricing tier forever. That doesn't mean that your price isn't going up. It just means you're gonna be in your pricing tier. Yeah, it's a great place to be. You want a financial planner? Have 3,000 of them. So talk to you guys later. Thanks for your time.